have your net purchase as 151,440 minus 3520. 151,440 minus 3520. So your net purchase is 147,920. This you can make another working note. And this I can transfer to my working note, and this would be my working note number 4. So this would be my working note number 4 for purchases. My net purchases would be 147,920. So I will write on my purchases working note number 4, 147,920, and I will write net purchases. So my net purchases at carriage inwards is 3,880. So this will become 151,800. Now my opening inventory of 8,250, purchases with adjustments of carriage inward minus closing inventory would give me my cost of sales as 138,970. So from the revenue of 226,640, when I subtract my cost of sales, I am getting a gross profit of 87,617. In that, when I subtract my other expenses was administrative expenses, bank interest, insurance, interest on loan. Before that, I will go on my sum above and I will see if I have any other expenses. So there was administrative, interest, insurance was done, interest on loan is done. Now there is a non-current asset over here. So we had a depreciation on the non-current asset and there was an increase in provision for 50. What was the depreciation on my non-current asset? Let's check if we had calculated. Yes, the depreciation on non-current asset was 20,800. So I will write depreciation on non-current asset, and I can show this as my working note number 5. It was how much? 20,800. And there was increase in provision. And this you can show it as your working note number 6 as 50. Okay. So I will show working note number 5 for depreciation of non-current asset. You can show the working over here. And working note number 6, you can show increase in provision. And you can show old minus new. What was your old provision? Old provision was 260 and new provision was 310. So 260 minus 310. So the increase in provision is 50, which should be recorded as other expenses. So like this, you have your other expenses. So your total of the other expenses, that is 6020 plus 180 plus 6,800 plus 200 plus 2,800 plus 15. So your total of other expenses is 34,050 from your gross profit. When you are going to subtract your other expenses, what you get is profit for the year, and your profit for the year is nothing but it is 53,620. So this is what we've done. Now they want lease current account. Whatever details we had from the lease current account, that we already wrote over here. Okay. So whatever details we could incorporate from the trial balance, that we had already put over here. So one was the balance begin down and one was drawings. So that same thing I'm writing it over here. So it was 1880 for balance begin down and 19,900 for drawings. Now you have to see your other information for balance begin down and drawing. So you have your balance begin down as 1880 and I had drawings of 19,900. After that we will see what other information was there. So there is loan from Lee and I had interest on loan. Where does interest on loan appear? Interest on loan would appear on the credit side of the partner's current account. So here I have interest on loan. What is the interest on loan? Which is 200. Now I have to see, I have been asked to prepare Lee's current account. So whatever information I have on top, I will prepare current account based on that. 53,620 is the profit for the year, which is to be shared between Karen and Lee in the ratio of 2:3. So 53,200, whatever amount, 53,620, it has to be shared between Karen and Lee in the ratio of 3:2. 53,620, 2/5 share for Lee is coming up to 3/5 share. It is divided in the ratio between Karen and Lee in the ratio of 2:3. So 3/5 share for Lee of 53,620 is coming up to 32,172. So 32,172 is the share of profit for Lee. Now there is no more information that was related to Lee. So I will close this account. This is 32,172. So when I close this account, the total of my credit side is 32,372, which is more. 32,372. So total of the credit is 32,372 and the total of my debit is 1880 plus 19,900, 21,780. So from the credit total, when I subtract the debit total, I will get my balancing figure, that is the closing balance of Lee's current account as 10,592, and this will be my balance begin down of 10,592. Do not forget to bring down this balance because you are given 1 mark over here. I read the question further ahead. Now they want me to calculate the increase or decrease in Lee's current account balance on the last date, that is 25th February 2022, assuming that some new agreement has been made from 1st of March. So this new arrangements has been made from March 1, 2021. And they want me to calculate lease current account balance on February 28, 2022. That is March, April, May, June, July, August, September, October, November, December, January, and February. Okay, for the 12-month period. So what is the new agreement that has been made? The partners have been considering to make a more detailed partnership agreement where they want to include the following terms. What are the terms that they want to include? Interest is to be charged on all the drawings at 10%. Karen is to be given a salary of 8,400 per annum. Profits and losses would be shared in the ratio 2:3. Now they want you to calculate increase or decrease in lease current account balance on 28th February. So let us see what was the profit that we had before. 53,620. So the profit that we had before was 53,000, that is profit before appropriation. So we had a profit before appropriation of 53,620. And now they want to do certain appropriations, which is over here. So they have certain arrangement of appropriations and they want us to calculate the new balance of leave, but the increase or decrease, which would take into effect after doing these considerations. So I will add the interest on drawings. What is the interest on drawings? Interest on drawings would be at 10%. I would subtract expenses towards partners, that means salary to Karen, which is 8,400. Then I will get my residual profit. Check what would be the interest on drawings. Drawings for both I have to consider. So drawings for both is 17,500 plus 19,900. So it is 37,400. And what is the interest on drawings that they want to charge? 37,400. Let me just take this down. Interest on drawings at 10%. Interest on drawings at 10%. So interest on drawings is, this is 37,400 into 10%, which is coming up to 3740. 3740. So my residual profit becomes 53,620 plus 3740 minus 8,400. So my residual profit is 48,960. This residual profit will be divided between Karen and Lee in the ratio of 2:3. So Karen will get 2/5 and Lee will get 3/5. Karen will get 19,584 and Lee would get 29,376. So this is totaling up to 48,916. Did they ask us to find the appropriation account balance, the residual profit, or they want to find out the increase or decrease in Lee's current account? So they basically want us to find out the increase or decrease in Lee's current account. So if I find the increase or decrease in Lee's current account, I know that currently Lee's current account has a balance of 10,592. Okay, now I have to find out the new current account balance if these changes were incorporated. So what will I do? I will make another current account for Lee. When I make another current account for Lee, I will put the old balance begin down, that was 1880. I will put the drawings as 19,900. I will put the drawings as 19,900. There was loan interest for Lee, and that loan interest was how much? 200. What would change is the interest on drawings would change. Interest on drawings for Lee is how much? What was Lee's drawings? Go back to the question. Lee's drawing was 19,900 into 10%. So Lee's drawing is 1990. 1990. Okay. And the Lee's share of residual profit would be 29,376. So let us see which side is more. The debit total. Only two things would change. One is the interest on drawings would be more, and this profit would change. Rest all would remain the same. Okay. So let me see what is the debit total now. 1880 plus 19,900 plus 1990. So the debit total is 23,717. Credit total is how much? 29,376 plus 100. So it is 29,576. So the credit total is more, 29,576. 29,576. 29,576 and 29,576. Credit total is more. From that, I would subtract the debit total. I will get my balance closed down as 5,806. And this would be my balance begin down as 5,806. Now I will again read the question. Calculate the increase or decrease in Lee's current account balance. So what was Lee's current account balance before the changes? So what was Lee's current account balance before the changes? Lee's current account balance before these changes was 10,592. 10,592. And what is Lee's current account balance after changes? So Lee's current account balance after changes is 5,806. That means there is a decrease in Lee's current account balance by how much? the decrease or the lease balance would be decreased, or I could say it would be reduced by 10,592 minus 5,806. It would reduce by 4,786. So this is your main answer. You should understand that they are actually asking you to calculate lease current account before the changes, lease current account after the changes, and you would compare the balances whether there is an increase or a decrease. Now the next question. Karen and Lee have considered to operate as a limited company. Give one advantage of operating as a partnership rather than limited company. What is the advantage of operating as a partnership when you compare to limited company? 2 marks. See, when I talk about partnership and limited company comparison, I could say that partnership has fewer legal requirements. So advantage of operating as a partnership over limited company is that partnership has fewer legal requirements. That means, what does it mean? It has less costs as compared to limited company. You can write more other things. Limited company has more legal documentation. They have to publish their accounts, whereas partnership does not have to do any such thing. So any advantage of partnership over limited company you can write. What is the advantage of operating as a limited company rather than partnership? What would you do? What would be the advantage of you that you choose limited company over partnership? So in the limited company, there is one advantage is that the shareholders have limited liability. But in partnership, shareholders have unlimited liabilities in case of dissolution. So two advantages of operating as a limited company. So in limited company, I can say in limited company, the liabilities of the partner is limited. Liability of partner is limited, whereas in partnership, it is unlimited. The liability of the partner is unlimited when you talk about dissolution. Another advantage of limited company is that limited company have access to larger finance. Why do they have access to larger finance? Because they can raise money from public. Because they can raise money from public. Whereas in partnership, all the finance has to be arranged either from own savings or you have to borrow money from outsiders. But you cannot do things like this in a in limited company. In limited company, you can borrow additional finance. Now the question number F. Partners are concerned about the business liquidity position. Karen believes that the problem arises because the business has too much of inventory. So she is suggesting that credit purchases should be reduced for the next 3 months to ensure that the inventory levels are lower. Karen is telling that we are buying too much of inventory and we have too much of inventory money tied up in the inventory. So reduce your credit purchases so that what happens is our inventory level is lower and our business has good amount of liquidity. Advise Lee, you have to advise Lee whether or not he should accept Karen's suggestion. So basically, you have to give advantages of accepting Karen's suggestion. So if Karen's suggestion is accepted, what is Karen's suggestion? Karen's suggestion is net reduce credit purchases, reduce the inventory level. So if I reduce credit purchases and reduce inventory level to improve my business liquidity position, what will be the benefit of it? If I reduce purchases, that means I will reduce cash outflow and I can save the cost because I will lower my inventory, so there will be less storage cost. There is less chance of wastage and obsolescence. But if I lower my inventory level, if I lower my inventory level, it is possible that I lose out on trade discount. And if I have some additional orders, I might have the risk of running out of inventory of the popular products. Okay, limited amount of inventory may also affect my reputation because I do not have much things to display. Now you have to suggest Lee, whether Karen's suggestion should be accepted. So you could say they could reduce a little inventory and not too much of inventory if they are concerned about the liquidity position. However, they should take into consideration that in case of stock out, where could they buy this inventory from? So this is how you can frame it. So whenever they are asking for suggestions, whether you should accept the suggestion or not, so you should take the suggestion, give advantages of the suggestion if we accept the proposal of Karen. If we are rejecting the proposal of Karen, the disadvantages of accepting the proposal. So advantages and disadvantages of the proposal, and then your suggestion. So this is it. So this is question number 1 of Karen and Lee, and it is a past paper question of May June 2022, paper 22.